What is up, everybody? We are back with another episode of Bullish's Top Stocks to Watch for the week and why. As always, before we get into it, hey, these are only my opinions. Do your own due diligence. I'm not a financial advisor or planner. These are things that I'm watching, not necessarily playing, but I also try to show you why I'm watching or why I'm playing these. And also, hey, real underscore bullish, wherever you get your social media poison, Instagram, Twitter, stock twits, real underscore bullish. Let's engage and talk some shit and have some fun because that's what it's about for me. It's about making money. It's about learning. It's about being a nerd, but it's also about fun. Let's have some fun with it. Also, hey, give us a sub here on YouTube. Subscribe. Help me feel good about myself. I appreciate that. Also, realbullish.com started a website. If you sign up for my newsletter, I'll send you some free information. Just like if you sign up, you get a free RSI, infographic or cheat sheet or whatever. And I'm gonna just keep those going and have fun and get different topics. So if there's any topics you want me to kind of explain, I'll try to dumb it down. There's a lot of really good information on the web, on websites and YouTube and stuff, but I want to just give you kind of the hits and how I see it, just give my interpretation of it. So realbullish.com, go sign up for our newsletter, and I'm gonna put some merch on there, put some blog posts, and just have fun with it. This is a lot of fun to me. Even if no one sees it, a lot of fun to me. Anyways, this week I'm playing earnings with Advanced Auto Parts, Salesforce, which is called CRM, and Salesforce is a CRM, customer relationship manager, and also Dick's Sporting Goods. I'm playing earnings this week. I always look at earnings, but I don't always play earnings every week. I have to have kind of the right tailwinds. I have to have the technicals the right way. I have to, they can't be too far extended. They can't be too low. As I saw with apps, if they're too low, that's also a telltale sign of maybe to stay out of it. So I watch earnings weekly, but I don't always play them. But this week there were three of them that I just really couldn't get away from. It. But we'll step into Advanced Auto Parts. So Advanced Auto Parts, I've played this before. Look at my original bull thesis on episode 22. I think that was in January of this year. Basically, I kind of laid out why I was watching Advanced Auto Parts. A lot of different things. It's a really strong cyclical, consumer cyclical thing. And I think Advanced Auto Parts is great because it's not too far extended like AutoZone and stuff like that, or Riley's or whatever the other one is. But also they're kind of an interesting play on do it yourself, but also like actual mechanics that go there. So I think it's really good. But also it's bringing those tailwinds of people holding their cars for longer. As we know, with inflation or reflation or however you think about, shit's cost more, and that goes with the cars and shit as well. And people are just holding on to their used cars longer. The lives are extending, and to do that, they need to go to Advanced Auto Parts and places like that. And really, honestly, for me, Advanced Auto Parts is the one that I always find myself going to. So it was something that was really interesting to me to look into, right? But anyways, there's an 8% straddle price for Advanced Auto Parts going into earnings. There's earnings on 8/24, and a straddle price, you can think of it as you're betting on movement, not necessarily you're saying it's going up or it's going down. You're saying there's going to be a significant movement, and this straddle price is 8%. So they're betting it's going to move up or down 8%, and that's always interesting to me when you kind of see a straddle, above 5. For me, it means there's a likely imminent movement because options are telling you. But also just looking at the earnings, there's a same quarter year over year. So looking at this time last year when they reported earnings, it's estimated that this year earnings per share is going to increase by 53%. Always good. Over the last 12 quarters, Advanced Auto Parts has meet or exceeded expectations 75% of the time, right? And over the last 6 quarters, it's raised the day of earnings 50% of the time. So those numbers, 73, I want that a little bit higher. I like in the 80s. That 50%, I like that in the 70s or higher. So those are more yellow flags to me, but I think interesting with combining that with the chart. But also there was an interesting price target increase from Raymond James of price target of 250, right? That came in, I think, July 27th, so late July. So I always like to see analysts increasing their price targets for the upcoming earnings and then after earnings. You definitely want to see that. To me, it's a really good sign before earnings, right? And also for this one, it's not too far extended, right? If you look at Yahoo Finance, which is I go to get prices and average prices, the average analyst price, the current price is actually 8.5% below that. So, it's not too far extended yet, in my opinion. Now, that's just why I looked at the earnings, but looking at the charts, it was really good too. If you look at the month level, basically what I see is some consolidation here in the last 2 months, right? It's in an upward channel still, but it's really testing the lows of the channel before the earnings, and that's what I love to see here. But also what you see is RSI is kind of meandering to being flat. That's not so bad because it's not a huge sell-off. It's just kind of consolidating. Consolidation station, as Dennis Dix likes to say on pre-market prep. Watch pre-market prep or listen to it on the podcast. It's really good. Anyways, MACD, moving average convergence divergence, is still going in a bullish pattern, right? These two lines are still kind of separating or diverging still at an increasing rate at the month level. So I do like that. I wish this 10 EMA at the month level is closer to the current price, but it's consolidating. So it's letting this line hopefully catch up to its price action right now. At the month level, it looks interesting. But at the week level, I think that's when it gets even more interesting, because if you look at the week level, still in this upward channel, right? So you see this, and it's not rocket science. You connect the two highs from the last like price movements, and you connect the lows, right? And you get like a channel, hopefully. And that's what I like to get it at, a channel making all-time highs, but when it retests lows of the current all-time highs, meaning it's getting higher, but there's a pullback. I like buying all-time highs on pullbacks when there's a catalyst upcoming, and hopefully this earnings is going to act as the catalyst itself. Right. So basically that's what you see here. And you know me, like I like to see price action at the week level crossing this 10 EMA, touching it or crossing it, either below it, crossing it, or just touching it and above it, right? And we see that all here. It all happened in the same week. It touched it, crossed it, and is still going. And that's exactly what I love to see. The 10 EMA is crossing, is breaking out, hopefully next, of areas of previous resistance. This was resistance before. Now it's acting as support with an upward channel, crossing the 10 EMA on the weekly. We haven't seen any volume come in. I think people are kind of waiting at the week level to see what's going to shake out. But what I love is RSI, realbullish.com, to see how I use RSI, or just get a breakdown of it, a little bit, quick breakdown, a lot of fun stuff. But anyways, RSI is moving to be bullish into this area of, usually 70 and 30 are two areas of importance or possible correction, and it's moving to this 70 area. So we'll see how it works there. But MACD is still kind of going flat, which I love with it, because all these are kind of just moving sideways, and that's what you want to see. It's great to make all-time highs, but then when it starts moving sideways, it's trying to catch up, catch its breath. You can't just sprint all the time, right? You got to catch your breath. At the day level, I like it too. Month levels is interesting, week level is interesting a little bit more, but the day level is where it looks like it wants to pop off, because you still see that upward channel, right? You see a few different, maybe a week and a half, testing this bottom of the channel, testing the support, using as channel support, price level support, but also you're seeing volume come in almost over average. We had 546,000 shares traded on Friday alone. Not over average yet, but it looks like it's starting to build. It had bearish volume increasing, and then it started decreasing. Then you saw bullish volume start trying to hopefully come in. RSI is at this really cool level of 52, because it can go up, it can go down, it can stay the same. But I love the 50 area for RSI, because it's more meandering. So it's showing me that it's kind of like testing it, right? It's not ready to sell off, it's not ready to pop, but we'll see with the earnings. I think that could be a catalyst one way or the other. But what I love also is MACD is also kind of rounding. So I love that MACD is rounding, RSI is rounding, price action on the bullish side is starting to come in, and we have a lot of channel support below. So I really like Advanced Auto Parts. I did a poll on Twitter, I think on Monday, Advanced Auto Parts, Salesforce, and Snow. I think Advanced Auto Parts, I was the only vote for that one. No one wanted that one. CRM, I think, was the winner. Snow was the one that was winning at first, but then CRM came. So it was CRM, Snow, and then Advanced Auto Parts. I do like Snow still. Like, I'm a big fan of Snow, and it's funny because CRM is one of the early investors in Snowflake, right? But I chose not to call out Snowflake, just because like their valuation is just insane right now. They're not trading on earnings, they're trading on fucking multiples of sales. So it's still, I want to see some. I like it. They're a fucking hitter. Got this yak. I got some like on my teeth. I don't know what's going on. I like some fuzz on my tongue or some shit. But anyways, hopefully that yak helps, But anyways, CRM, I didn't chose go I'm doing CRM or Salesforce. I'm a big fan of Salesforce because I'm a user, I'm in marketing, I'm a data guy, and it does all those. They bought Tableau. Marc Benioff is just like the M&A god. You know what I'm saying? Like, that guy just knows. He's like Lisa Sue. He knows what the fuck he's doing. He knows how to, at the same time, increase shareholder value, increase his company's value with looking into the future. One of the things I like that they did recently is the acquisition of Slack. People talked a lot of shit about it, but honestly, like, Slack is hotness. CRM is good too. They're a little bit more legacy now, but they were like the early adopters in terms of having a suite of systems that's gonna, like, someday, I think, rival Microsoft. I don't think that, I'm not a Microsoft fan. I thought Microsoft was invented 20, 30 years ago. Right now, I don't think there's any company that's disruptive in the world that's using Microsoft. I'm sorry, prove me wrong, and that's cool. It's G Suite, it's things like Slack, and that's what I love, that CRM kind of saw that and said, hey, people are gonna start working from home more. That's the thing. I'm never going back in the fucking office the same again. Hell no. And I think a lot of people are on that line, and Slack is really making it interesting to do that. You have things like Slack and Discord. Discord's a little further away. It's more niche and into, like, for trading or gaming. But I think Slack is that perfect combination. I will never use Teams ever in my life. I use it. It sucked. But anyways, that's just me talking shit. But anyways, Salesforce, they're integrating with Slack, or they acquired Slack, which I thought was good. They're a little bit expensive right now. They have a 66 forward price to earnings, so it's a little bit expensive, but it's all relative to the industry, right? So 66 is expensive, but along its competitors, it might not be. I think it's like in the middle, but in the top. So if you look at the earnings, they have earnings on 8/25 aftermarket close. They're estimated to have a 37% increase same quarter year over year. So looking last year, their earnings per share is set to raise 37% above where it was last year, right? And their price target isn't too bad because people didn't like the Slack integration, thought he paid too much. I get it, but we're seeing that kind of shakeout now, which I love. It's actually the price target right now is 9% under what the average analyst price is on Yahoo, right? So I think there's a lot of meat on the bones there still. You want to get it. You don't want 60% under what people are saying the average price is, because I did that with Brainwave and with apps, and that should have been the tells to me. They were both 60 to 70% under the price when I looked at them, under what the average Yahoo analyst said the price should be. So I think to me that kind of shows, hey, like that probably shouldn't have been the case, or something you want to link. That was a red flag basically. But anyways, 9% I think, or 10 and under I think are prime targets, right? Once you start getting into the teens, it gets a little bit like, why is it so much below? But anyways, so that's just a little bit there. But anyways, over the last 18 quarters, Salesforce has beat revenue, not beat or met, beat revenue and EPS estimates over the last 18 quarters. So it's not a question of it's going to beat. It's going to beat. It's about how much it's going to beat, right? And if it increases after earnings, because only if you look over the last 6 quarters, only 33% of the time has Salesforce raised after earnings. So that's a little bit of a red flag to me. But I think that with the other things that you look into, like the channel support and the Slack integrations and stuff, I think it makes it for a compelling thing to watch and maybe play, right? So yeah, and just looking at the charts, what do I see on the month level? Which is, the month level is really hard for me to read patterns, because it has to be like, we're looking at whole months. So your time horizon in terms of where you're gonna see the pattern breakout, you have to be super, super patience. And patience is a virtue. I get it. Trading does teach me to have more patience, but basically when you look at patterns on the month level, just keep in mind these things aren't going to happen overnight. They're going to take months to develop, sometimes multiple months to develop. But what you do see here is kind of like a rounding bottom in terms of cup and handle. If you look up, I might do a thing on cup and handles, but I love cup and handles because basically it's a really easy thing to see visually. We're visual people. It's a pattern you can see, and it's things you can say, hey, it's this much. This is how much the cup is from the bottom to the top to the lip. This is how much it is. Layer that over what the breakout is, and this is what I think my price target is. So usually cup and handles, you see a rounding bottom, you see a break of this price, and then a possible retest for the handle up to 50%. So if like it goes down here, it's not a cup and handle, but if it goes here, it's a prime candidate for a cup and handle, and then it retests for the breakout. So that's what I love to see at the month level. But like I said, it's hard to see at the month level because you have to wait a fuckload of time. But anyways, I like a lot of things. I like RSI coming up. I like MACD rounding out. I like that, at the month level, it's touching perfect. I want to see this at the month level every time, but you don't see that all the time. But I love that it's closer to this 10 EMA, because there has been a lot of sell-off recently because of that Slack integration and stuff. Because for Salesforce, you're really betting on the future. You're not really betting on the current, you're betting on the future even more than normal. But anyways, at the week level, I love it as well, because you see RSI coming up, right? My RSI has been on a climb since 322. So that's what 4.5 months ago, let's say, 5 months ago, let's say. RSI has been on a climb since then. And when it gets close to this area of 70, we'll see what it's going to start doing here. Possible areas of correction, right? But MACD is also going along with that trend too. They kind of both started kind of getting bullish at the same time. And that's when price started kind of increasing here. And like I said, hey, I like to catch things as they're touching, as they're crossing this, as they're touching, or as they're moving away. But I love that it's still touching the 10 EMA at the week level, because that shows me it hasn't taken off yet, but it's like priming to do so. And you can see it even more at the day level when we come to that, because it's using the bottom of this channel that really started around 512 as the thing that it touches and goes. It touches and goes, touches and goes, touches and goes, right? So that's something that's really bullish to me, right? But we'll see as it approaches this area of possible breakout. This is going to be another area here. And I have an alert set for that. Call it the 263.13 area. That's an interesting one, right? But you see 3 consecutive days of volume over average for bullishness. You haven't seen that since 722, so since about a month ago, right? But also RSI is coming up right into this area as we talked about a possible correction. You have MACD that's still diverged to be bullish. So I love CRM for all those things. The charts look really good. The earnings are going to be okay. They're going to beat, but it's about if they're going to raise after they beat, right? The last one I want to talk about is Dix, and I love Dix. I just like saying the word, but also I love the company. I've been watching it for a while already. I think I started watching it at the beginning of the year. Basically, they have earnings coming up on 8/25 before market opens. That yak boy, it's good. Basically, they have earnings coming out before market opens on 8/25. Like I said, but they are up 100% year to date. So people are taking profits, right? 100% year to date. You're going to take some profits, and it looks like it's been consolidating at this 100 area. 100 areas psychologically, 100, 200, 300, even half like 50, 150. Those are important areas. So right now it's playing with that area, but it's up 100% year to date. So substantial gains just year to date, and people are, granted, people are going to take profits on that, right? Eventually, right? The estimated year over year increase for the EPS, same quarter year over year, 15 minutes already, is at 108%. So it's estimated to increase their earnings per share from this time last year by 108%. Over the last 12 quarters, they've beat expectations 91% of the time, right? Over the last 6 quarters, they've raised the price is raised at earnings day 83% of the time. So over the last 6 quarters, 5 quarters, they've raised the price where they started the day, earnings where they ended the day, right? And that same number is true 100% of the time, looking either at the first day or the seventh day. So if you look at earnings over the last 6 quarters, either the first day or the seventh day, they have raised what the price was when they started earnings. Hopefully it doesn't confuse anyone. But anyways, motherfucker raises after the price is what I'm trying to say. And honestly, Dix is not that expensive, They're only trading at a 12 price to earnings as opposed to 66 for CRM, right? So put that in consideration, right? But it's different industries, I get it, but still, it's not that expensive. And they have a dividend they have a good dividend and a 15% short flow. So, a 15% short flow is not too crazy, but it's still like, wow, 15%, because that's when if you get a really good pop, motherfuckers gonna have to start covering. And all the short float purists, I get it. If I'm looking at Finviz or whatever, Seeking Alpha, I'm not getting the exact short float, but it's as good as I can do. Right, so give me some credit. Leave me alone. I'm just kidding. Anyways, looking at the charts, what I don't like about Dix though, Dix. What I don't like about Dix is, as you can see here, maybe you can guess it. It's at the month level. It's really far away from this 10 EMA, so it signals to me that it's been floating here for a couple months already, maybe even 3 months already at this 100 level, right? Because it's gotten too far extended, maybe. But hopefully now we can consolidate and we can let this 10 EMA catch up. Like I said, hey, this RSI level, this motherfucker's screaming at 83 right now. This only goes to 100. So it is at an area at the month level of possible correction, but MACD is still bullish, so that's good. So the month level doesn't look too good. It looks a little bit better at the week level. This is how long I've been watching Dix. Sorry. They're like, back to late last year. That's when I started watching Dix. But anyways, at the week level, a couple things I do like. I do like that it's still touching this 10 EMA. Like I said, I don't want it too far away from here. Like I wouldn't want to catch it right here because it's gonna take time to consolidate down. I wouldn't want to catch it here. I want to catch it as it gets hugs his 10 EMA. And that's what we see here. Still kind of touching it, but extending off of it. A little extended, honestly. But, you have a few things here that I do like. It's still in an upward pattern, right? It's still touching. I want to catch it as it's touching the bottom of this channel. Not when it's extending, when it's touching the bottom of this channel now that it's broken over this area of 104.55, now I want to catch it as it retests this. If it breaks it, you have to have a plan for that. But I like it as long as it stays over this line, touching this area. If it touches this, boom, touch it, Dix. But anyways, we haven't seen any volume over average basically since 524, so about 3 months now. We haven't seen volume over average, but maybe this can be the catalyst to start that. RSI at the week level is still kind of meandering, but it's at an area of 70, so it's still running hot, but it's still a little bit extended. And I want to see it cool off a little bit. MACD is still kind of going flat, but where I thought this was interesting was more at the day level, because we did over the past 4 or 5 days have this correction here, right? And it was like skirt, and then kind of went back up. You see RSI dropping, skirt, resisting that, right? It's finding support here at that 104.44 area, right? It's finding it there, and I think that's perfect as long as it tests this bottom of this channel, but keeps this area of support, I like it, right? You do see volume over average coming in over the past 4 days. The majority of it's been bullish or bearish, so watch that, right? But I like RSI, it's coming back. MACD is kind of rounding out as well. And I like that it's kind of not too far extended at the day level. So I think that a really good earnings for Dix, it's probably a thing you want to hold longer term. But I like the charts because honestly, I like the company itself. Anyways, we did this in 20 minutes or less. Fuck yeah, everyone! It's AAR, it's AAP, CRM, and Dix. Everyone have a great week. Good luck.